Hello, and welcome to 10-Minute Mastery. This 10-Minute Mastery will cover completing business transactions impacting the accounting equation. This is Watch and Learn Part 2 with more transactions. By the end of this 10-minute mastery, you will be able to demonstrate how various business transactions impact the accounting equation. This is part 2 with additional business transactions. Be sure to view part 1 to learn how to record different types of business transactions. As a review from part 1, we learned about the expanded form of the accounting equation, which you can see here on your screen. Even in the expanded format, assets is still equal to liabilities plus owner's equity. Keep in mind, after you record each business transaction, your accounting equation must still remain in balance. Let's watch and learn how this works. We'll start with transaction 1. Received cash from owner as an investment in the amount of $7,000. This transaction is recorded on this row. This transaction impacts the cash account and the capital account. Keeping in mind, each business transaction will always impact at least 2 accounts. Here, we are going to increase cash by $7,000 and we increase the capital account by $7,000. On the next row here, we have the new balance. So we're just going to bring down the balance in each account. The cash balance is now $7,000. These balances are 0 because we did not use them. The capital account balance is now $7,000, and then these account balances are still 0. As you can see here, each side equals 7,000. This means we have remained in balance. Transaction 2, sold services on account to edit services in the amount of $300. This transaction goes on the next row. This transaction impacts accounts receivable, edit services. We're going to increase this account by $300. And the transaction also impacts fees earned. And we're going to increase here by $300. Now we're going to bring down the new balance. We keep it at $7,000 here because cash was not impacted by this transaction. We now have a $300 account balance in accounts receivable. We bring down our $7,000 account balance in capital. And then we now have a $300 account balance in owner's equity, fees earned. And then you can see here the accounting equation remains in balance. Each side equals 7,300. Transaction 3, received cash on account from edit services in the amount of $200. Received cash on account. This will impact the cash account and will increase by $200. And this transaction also impacts accounts receivable, edit services, and we're going to subtract $200. So we're adding and subtracting the same amount on one side of the equation. That's okay, and that's correct. This will keep it in balance. After we bring down the new account balances, you can see we're still in balance. Each side is still equal to 7,300. Left side equals the right side. Transaction 4, Tanya P. withdrew equity in the form of cash in the amount of $650. Here, paid cash to the owner. This will impact the cash account. We're going to decrease by $650. And the transaction will also impact drawing in the amount of $650. On the next line, we bring down the new balance. And here you will see we're still in balance. Each side is now equal to $6,650. The left side equals the right side after each business transaction. Keeping in mind, each transaction will always impact at least 2 accounts. Thank you for viewing. Please don't forget to subscribe and leave a like. Feel free to leave any comments below.